Hi everyone, thank you so much for joining us today for our webinar on Unlocking UK Property Market. I'm Gurtej Kaur, co-founder and director of Amoka, and today I'll be one of your speakers and I'll be your host. We'll start the webinar with a quick introduction from each of our speakers, then we'll walk through what Amoka does, what API does, and our strategic partnership. After that, we'll dive into what's really happening in the UK market right now and where the real opportunities are. We've got some real life case studies and live projects to walk you through. And finally, we'll wrap up with a few ways you can stay in touch and keep the conversation going after this webinar. Sawan, next slide.
Yeah.
Before we dive in, we'll get the speakers to introduce themselves. Sawan, would you like to kick us off?
Yeah. Good morning, everyone, or good afternoon, depending on where you're joining us from. I'm Sawan Ruparel. I'm a chartered surveyor by profession, and I'm also the co-founder and director of Amoka. I own and operate real estate in both Kenya and the UK and bring that expertise of multi-jurisdiction asset management to our clients at Amoka. As a surveyor, I've worked at Cushman & Wakefield and JLL in the real estate investment space, as well as a registered valuer with the RSCS. I also bring with me a wealth of property management experience. My aim at Amoka is to bring all this experience from a professional and institutional background and through my personal portfolio to help clients build a global portfolio that has strong aggregated and stable returns. Tony, would you like to explain a bit about yourself and your background?
Yes. First and foremost, thank you, everybody, as Sawan says, for joining us this morning. This will be recorded and be able to, we'll send it out to everybody on the call. And if anybody has anybody they want to just please forward on. My name's Tony Jordan. I am the regional director for Africa for API Global. I've been in the industry selling international property for over 20 years, originally from the UK. Had 20 years experience based out of the Dubai office, looked after Asia, India, across Europe, and even into South America before landing in Africa in 2019, and then COVID hit. But I've been running Africa since 2019. Moved into Harare March of 2024 to start advising clients and being based on the ground and put the 50 flights a year down. But now the last 6 weeks I've been based out of Nairobi. A big thank you to the guys at Amoka for welcoming me and making me feel very home in Nairobi in Kenya. We've been working together since March, API and Amoka, and we're starting to really get some strong traction now with the Kenyan investors and other investors across Africa with the social content that the guys put out and all the research and due diligence that the guys do at Amoka really fits hand in glove with what we do at API. And I'm looking forward to going through the presentation with everybody.
Before, I'll give a quick introduction about myself as well. And so I'm an interior architect by profession. And before co-founding Amoka, I've worked at global real estate firms like JLL and CBRE within project management and valuation advisory teams, both in India and the UK. And having worked internationally across different markets, I bring global perspective to investment strategy. And at Amoka, I focus on key markets, business development, as well as ensuring clients have straightforward, seamless acquisition, ownership, and exit processes. Okay, now that we've met the team, let me tell you a bit about what Amoka does. We are so proud to be an RSCS registered firm, which means that we operate to the highest professional and ethical standards in the property industry. Amoka is a London-based investment agency, and we work across two key areas. Firstly, we work closely with developers where we help them acquire the next site. We across all asset classes, whether that's residential, commercial, or mixed use, and we've advised on sites ranging from 1 million to 100 million. And the second arm of our business is what we're representing today, focuses on investors. We provide cross-border investment advice to clients to help build their global portfolios, helping them start or optimize their diversification process into the UK market. We operate on a full circle approach designed to make international investing simple, strategic, and effective. Now, let me hand over to Tony to introduce API and our in partnership.
Thank you, Gurtej. Yes, as I mentioned when I was doing my intro, I worked for API for the last 7 years. We've grown the business dramatically to be a global player now and the number one business that offers international clients access to the UK buy-to-let property market. We've done over 1.5 billion in cross development and sort of in value, but more importantly, sold 3,000 units, and we have basically just under 1,200 units under management. And I think we'll get on to the next or the slide after to talk about what we do as a business and how closely we work with the Amoka guys. But we actually, first and foremost, are a research-driven business. We're not an estate agency. Every client we treat individually. We look at why Manchester, why Birmingham, and work with the best developers in the UK, whether that be entry level in regional cities like Leicester, Derby, and Nottingham. We've got projects coming up this year in Sheffield and Leeds. That's a big investment hotspot at the moment. We prioritise clients' returns on their investment, whether that be a rental yield for a passive income to support a pension or any investments that a client may have. But mainly clients are looking for capital appreciation, and I'm sure Sawan will get into a few stats and facts and figures later in the presentation. We try and minimise risk as much as possible with deposit protection and working with the best developers in the UK. But more importantly, my job in APIs is to offer an end-to-end service so the client journey is easy as possible, offer the best projects in the UK that give a fighting chance of giving safe, secure, steady rental growth and capital appreciation, and all under one umbrella of the API and Amoka end-to-end service.
Brilliant, thank you.
Tony, would you like to walk us through the investor journey, what it looks like?
Yes, I think that follows on quite nicely. Thank you from that slide of who API are, and as I said, first and foremost, we're a research and due diligence driven business. We have everything under one umbrella, which means that once a client engages with us, the first sort of few meetings are on who we are, what we do as a business, understanding the client's needs. As I said, every single client's budget is different. Why they think in investing into the UK? Is that a currency play? Is it a diversification of their investment portfolio? But talking them through, more importantly, before we even get to the product, is talking about how we have secured over the last 10, 11 years the best mortgage companies that we work with. We have an in-house mortgage team now based in the UK, Dubai, and the Far East, because obviously as a global company, we have 15 different offices across the globe on different time zones. So we work with 82 different lenders, and equally getting the maximum LTV to return the biggest ROI on the capital employed by the investors is very important. Now, with the mortgage team, when they sit down with clients, it's a specialized subject. They talk about variable rates, 2-year fixed, 5-year fixed, as sort of we're all looking now at the economy across the globe, and we have had higher than normal interest rates over the last sort of 18 months to 2 years, but we see sort of the interest rates coming down. It's very important that when a client is securing a mortgage or talking about finance in the future, if it's an off-plan project, is that we actually secure the right mortgage for the individual client itself. And as I say, this process is all under one roof. So the investment advice comes from somebody like myself, an industry professional who's been in the business for over 20 years. We can show due diligence reports, market research that Sawan's going to go into, mortgage finance. We have a fantastic sales progression team that hold the client's hand all the way from a reservation to exchange of contracts, where the client will have a legal charge on that property that they've reserved, all the way through to practical completion. There'll be myself, the Amoka team, and the sales progression team at API. Regular construction updates, and again, I don't want to steal anybody's thunder, but it's very important at the end of the presentation you understand how you can keep in contact with us and see on the WhatsApp community that we've set up, and the guys update regular from the information that I send. You'll see construction updates, the odd unit that comes back in a sold out development. And we're just talking about the W Residence, which was our biggest success. So the 2 years ago in Manchester, the only branded residence outside of London, there's a 2-bedroom come back onto the market, and is a rare opportunity for an investor to get into the premier branded residence outside of London. And I think also, as well as the sort of solicitors in place, the sales progression team, the mortgage company, and the property management company. Property management company do everything from finding a tenant for you, snagging with the developer, collecting the keys, putting the tenant in, furnishing the apartment. Then on a monthly basis, you will get regular updates from your portal that you have as a landlord. The rent has been paid, the bills have been paid, this is your return. It's been sent to the bank where the mortgage finance comes out of. And again, as investors on the call this morning, the question that we always get asked is, do we have an exit? Well, of course you do. You actually own this property. You have a title deed, which I think is very important to point out, that is registered at the land department. And I think for as little as £3, you can go online and you can see your title is registered to you. But at any time after completion that you want to exit, we support you with that, with our after sales team and our property management team that have partnership with Countrywide in the UK, that have access to 2,200 offices across the UK.
Oh, that was amazing. That was such a thorough. Sawan, would you like to explain why the UK is such a strong market right now?
Yeah, so thank you, Tony. That's a really good background on how we support clients through the customer journey. So far, you'll have seen, if you joined late, don't worry, there is a recording, but you'll have seen who Amoka are and who API are. Right now, I'm going to go through the UK market and why the UK market makes so much sense for investors. So if we look at the first and most important point with the UK market, that is the supply and demand dynamics. So particularly when it comes to residential homes in the UK, there is a huge shortage of supply and a continued and stable growing demand. So if we look at this graph, which has been built from the Office for National Statistics, which is a public domain in the UK of data on residential and all property information, we can see, looking back towards the millennium, there hasn't been a single period of 5 years where the UK has actually met its targeted homes construction. And the shortfall has continued to build. Even though this graph only goes back to the year 2000, that problem has actually persisted much longer than that. If we look at what the reality of that is in terms of numbers, today, as we stand, we have 1.5 million homes shortage in the UK across England. The Labour government that's now in power has targeted over the next 10 years a delivery of 3.5 million homes, which equates to a circa 350,000 homes being built each year. Most experts in the industry believe that we're going to fall well short of that due to this endemic reasons that we have shortfalls currently, and they're likely to continue going forward. What that means on a year-to-year basis is we're only really constructing about 115,000 homes per year compared to the 350,000 target. So what you will see over the next 10 years is that 1.5 million number grow and grow. Now, what that has meant is that the place for landlords in the UK is hugely important, as there is a growing demand for supply of rental properties in the UK. Just in London, if we look at the last year, rents are up to an average of £2,249 per month, which equates to an 11.2% increase. If we look UK-wide, just on a year-to-year basis, that's 7.7%. And what that means in reality in terms of the tenant-landlord relationship is when you're marketing your property in hotspots like Manchester, which we have some fantastic developments, on average, it takes 14 to 17 days to let your property. Now, we have developments like Waterhouse Gardens and the W that Tony mentioned, and Obsidian, which are in prime areas of Manchester. And for those kinds of developments with the level of amenity, you're looking at even shorter rental periods than 14 to 17 days. Again, all our data is backed up. This is all from the Office for National Statistics and the UK Housing Review. So please feel free to look at the source data if you have any further questions, or ask us on a call. In terms of this graph, which looks at continued and growing and stable returns, what we're looking at here is essentially the stability of the rental market despite issues and global factors like the 2008 financial crisis, the pandemic in 2020. When you have a market which is so skewed to huge demand and a lack of supply, we have seen strong and stable growth in rents, average rents across England going back to 2005. And this is likely to continue as the supply shortage continues. This graph is really important to understand because it shows why investors are returning to London and how, as a whole, in terms of England and London, rents are continuing to increase. So on the bottom here, you have the going back all the way to 2005, so 20 years, and on the left you have the average rents for England and London. As you can see in London, there's been a steep increase since COVID. Again, this has meant that investors are really achieving some strong net yields in London, and you've seen some people really come back to the London market. And we do have amazing new properties in the Claremont Quarter and Cricklewood and Becca and Old Kent Road, and we're seeing investors take that uptake really well. But even with that, across England in general, you have quite a lot of success in terms of growing rental on an average basis. I'm now going to pass on to Tony, who's going to talk about some of the key investment hotspots across the UK.
Thanks, Sawan. And yeah, they're really interesting slides. And as you said, as a business, the investment team working alongside our developers, we sort of noticed a bit of an upturn on yields. As you know, you guys live in London. We got what we called yield compression. Sort of, I only sold London between 2006 and 2015. There was no Manchester or Birmingham. There was Manchester and Birmingham, not from a property perspective, really, until the sort of government changed with the Northern Powerhouse Initiative, and we saw company migration, the likes of HSBC moving from Canary Wharf to Birmingham, BBC moving from Shepherd's Bush up to Manchester. But interestingly, as you say, we've currently got 4 projects in London, whereas probably a year ago we'd only have 1 London offering. As I say, with being a global business, Dubai, certainly Hong Kong, Singapore, we have investors there who actually only, even through the sort of yield compression days, would only really look at London, probably because they'd heard more about London than obviously your Manchesters and sort of Birminghams. But yeah, as you say, we work with the developers. We're trying to find value now. I only sold Zone 1, Zone 2 in sort of the early 2000s when you could get into central London, a bit like we've seen over the last 5 or 6 years in central Manchester and Birmingham. But you have to go further and further out to find value from an investment perspective. Now, as I say, we don't sell trophy homes in Mayfair. We'll leave that to the Knight Franks and the Savills. But what we do as a business, even in regional cities like on this sort of hotspot map, is we work with developers to find good transport links, regeneration areas, student retention, company migration, and population growth. So they're the main drivers in the investment case that we look for, and finding the areas for investors to look at, and obviously working alongside people like Chase Homes and the Barclay Group in London. Obviously, Salboy are one of our biggest developers in Manchester, Elevate in the Midlands, Derby, Leicester, and Birmingham. And obviously, Liverpool's always on the sort of investment highlight, where we were in the market 5 or 6 years ago, and then there was a bit of an influx of developments that didn't pass our DD. But as you see, as we go through the slides, we've got a blank slide saying coming soon, but it's a very exciting sort of project that's coming later on. But from an API and Amoka point of view, again, when we sit with a client, it's sort of, we've got 20 different projects to offer, everything from entry level, circa 150,000, and at a 65% mortgage, you're sort of in for 80,000-90,000 pound. We have everything from ready property, 3 months away, 6 months away, a year away, 2 years. The off-plan model that's works especially well with African investors, which I'll talk about later in the presentation. But basically now we've seen London yields come back up to your Manchesters and Birmingham. So you're anywhere between 4.5, your worst case scenario really now in London, but with the Becca and Claremont Quarter, we're sort of north of fives. Same sort of thing, Manchester, Birmingham, between 5 and 7. Leicester, on a short-term basis, we've got a fantastic project very close to the Royal Infirmary in 2 major universities in Leicester, offering between 8 and 12% on a short-term basis. And as I say, we have Nottingham's, we have Kent, 21 different projects to be able to sit with you, understand as an investor and your family what you're looking to do over the medium to long term.
Brilliant. Thank you, Tony. So moving on to some case studies and investments. So the reality of the projects we have on currently. Tony, I know you're super excited for the Claremont Quarter launch, which is literally less than a week old. And it's a London project in the regeneration area. Can you just talk us through this project?
Yeah, we're very excited to work with the developers, Chase Homes. The guys were in the Dubai office about 10 days ago, off the back of our success with a Cockfosters project, Equinox, which is coming up for completion end of this year. We sold it out very, very quickly. That was Zone 5. And you think Zone 5 is a million miles away from the centre of London, which, as a business, what we do is target city professionals who have got a good disposable income for rent, and there's a good tenant profile for a landlord. But the Equinox was Zone 5, but it was right strategically placed at the side of the tube station. So in 30 minutes, you got central London, but paid Zone 5 prices. So on the back of the success with that project, we partnered again with Chase, and we have 3 or 4 projects that I've been privy to look at that are coming later this year and into 2026. But Claremont Quarter we've worked with the guys for the last 6 to 9 months on this project. Zone 3, again, looking for that value for a client. But ultimately, again, even though it's Zone 3, from a travel perspective, from a tenant living in Claremont Quarter, you're 13 minutes into St Pancras. So I know there's people actually new.
Right?
1-3, 13 minutes. And I know you guys, where you live is pretty central, but I think it takes you longer than 13 minutes sometimes to get into central London.
It actually takes us half an hour.
Yeah. So, and again, what does that mean to an investor? What it means is that sort of you're entering into the London property market for less than 450,000. Now, again, what does that mean to an investor? One, you've got a fantastic developer with a track record, which means build quality, building on time, delivering what they say they do because it's off plan. 13 minutes into central London with a fantastic payment plan. Now, this is when we talk about off-plan property. What does it mean to an investor? It means that your first payment on a £450,000 property in London is 45,000 because we take 10%, which gives you a legal charge on your property. The developer can't change the price. It's locked in at that price. And then 6 months later, and with a very flexible payment plan, between 6 and 12 months later, a further 5% is required. So basically another 20 to 25,000. So literally for well under $100,000, you've secured your 15% deposit on a London off-plan project with one of the top developers in the UK. Now, you can see from the estimated completion time, anybody who wants a quicker completion, end of next year, which means that once you've paid your 15% between now and the end of 2025, you've got another year to come up with your final payment. And with the mortgage kicking in between 60 and 70%, you would either have another 30, 35% plus your closing costs on completion. Block 3, anybody who knows that they're cashing in some investments, they have bonuses through the build time, that's going to be ready end of Q4 2027. So again, giving you the ability to split your payments and what you're sitting on currently. I have a lot of clients who sit with me and say, look, I've got $100,000, but I can't afford London. Well, actually, let's sit down and have a proper consultation and look at how you can get into London property market. As Sawan said with the figures, we're seeing more than the green shoots of recovery in London. When I say recovery, London never really had a blip. It was just that the capital appreciation outstripped the rental growth, and that caused the rental compression. So Claremont Quarter, one of my favourites we've launched this year. You can see very attractive brick buildings, very close to Brent Cross as well. Anybody knows the UK, Brent Cross has gone through billions of pounds of regeneration. And again, what does that mean to an investor? It means more people coming into the area, more job creation, better, good transport links into central London. You get a better tenant profile. So you get a zone one, zone two tenant who works in the city, wants to pay less rent living in zone three, but easy commute time into central London.
Brilliant.
And how
Thank
has
you.
the response been so far? I know it's only a week old, and I know we actually haven't discussed that, but like, how's the
Yeah,
response
it's a
been
good
so far?
question. What we always find is when we launch, and this was one of our best launches, they've been in Singapore this week. As I said, the developers were in the UK office for the Dubai launch. Um, as you know, we're a business to business. That's why we work with you guys, and we're looking forward to growing our partnership through Africa. And all the first week to 10 days is educating our partners, travel times, regeneration, up to speed with the developer, and then it tends to start filtering out to clients. And I've been very busy, as you guys know, this week with office meetings, from the one-to-one meetings we've done and working with the agents on the ground in Nairobi. I've had more London meetings this week and planned for
Yeah.
next week than I have in the whole of the first probably 4 or 5 months of the year.
Oh wow, really impressive.
Yeah.
And then just to talk as well, because sometimes when we're talking to Kenyan investors in particular, they make sure we're not a typo on the tenure. That is a 999-year lease. I know that in Kenya the commonplace is 50 years, but in the UK a lot of our projects have 999-year leases, which is obviously an important point. And as Tony has also alluded to on the 85% balance on completion, the other key point to understand here is that a lot of that will be coming out of your mortgage as well. So that doesn't have to be cash in your pocket, but it comes from the UK mortgage lender that's working with you to secure the property. And I'm going to now go through a specific unit and exactly how we walk through the numbers with our clients. And this is actually a breakdown of what we send through into our WhatsApp community of the latest deals and with a snapshot of the financial outgoings and ingoings. So the key point here on the left is to look at the unit, which is a one bed unit 3B1 in Claremont Quarter with a balcony and a very efficient floor plan. We're looking at a 547 square foot one bed, which is very generous for London. I think an important figure to always look at on entry is your price per square foot, which to enter into a development such as this at £804 is quite appealing. And this specific unit is actually the lowest entry price into the whole development, which we find, Tony, I think you would agree that those units get nabbed up very quickly right off the start. And then they're quite very, very popular. On with regard to the mortgage requirements, and we're going to have a webinar coming up, which will be a masterclass in UK mortgages. But this looks at modeling the returns on a 65% loan to value. That's what we can realistically achieve with our African investors and our Kenyan investors with UK banks. And Tony and I were discussing before the call, the rates have actually simmered down now. So we're looking at 5% interest on those mortgage payments. I know in Kenya, people are used to paying much more than that over a loan term of 25 years. If you look at the snapshot across the bottom, what that means is with a flexible payment plan and your mortgage principal and your monthly income after any costs, you're basically looking to be net cash flow positive from day one. So £457 per month. And I think what's really important about understanding off-plan investment is if you're buying a unit which is, for example, becoming available and being constructed in Q4 next year, you will benefit from the capital appreciation of the following 18 months, as well as any rental growth that's plugged in. So you can really see that your capital position and your rental position can be stronger than the figures outlined here in this cash flow. Tony, I just want you to talk through, if that's okay, through how we basically break down our cash flow and what we send to our investors when we speak to them about specific deals.
Yeah, and just going back to your snapshot, and as I said, everybody who's on the call, Gurtej will go through. It's very important that obviously you can see from my grey hairs on my head and the sort of length of time I've been in the business that obviously working with these guys from a socials point of view, LinkedIn, Instagram, and the WhatsApp community grows on a daily basis, and the guys sort of post on a daily basis the construction updates that I send. But we sort of try and break it down in a very simplified way. But if we go on to the cash flow that we sit with clients with, this is in more detail. So the process is sort of when, please, everybody who's on today and anybody who listens to the recording, it's very important that we give you the overview of who we are as a business, the partnership together, what we offer from an end-to-end service, the product that we'll come on to. I always get the sexy bits to talk about the product. Sawan always gets the graphs, but he loves the graph. So, but once we've been through the sort of finding in detail about what the client is looking for and budget to work to, we then start drilling down into the build time, the actual project, and the developer we're going to work with, and we finally sit down and go through the numbers and crunch them that it work for the client. Now, the very important thing here is the process, once we've picked a particular development, is to reserve that unit off the market. Now, we take between 2, depending on the developer, and 5,000 reservation fee. This is not a commission. This is what we call a reservation fee to take the unit off the market. At the moment, we're selling between 22 and 30 million pounds worth of property per month as a business. So working across 5 different continents and different time zones, me and the guys wake up in London here, and already Asia on a Monday morning, it's into the afternoon, and units get reserved very quickly, especially in new projects. And to touch on the point that Sawan talked about, when we launch, don't forget we've been in business for 11 years now. I have over 300 investors I work with in Africa, is that all the investors go in for the right size unit at entry level price in the best development. And it's like 6 months down the line when we get to the £550,000 one beds that are left. Somebody says, well, they were originally 450. Well, yes, but you should have reserved a unit a year ago. But the cash flow is very important, that the 5,000 or 2,000 reservation fee is not a commission. That is offset against your exchange monies. As I said, that can be anywhere between 10 and 20%, depending on the developer. So you will have a payment, whatever that is, percentage, within 30 days of a reservation. And then you have nothing to pay to completion. We'll have your final installment, depending on your mortgage percentage against your property price. We will then sort of put on the cash flow your mortgage costs, the brokerage fees, your land registry fee. Darwin pointed out it's very important that everything's registered in the UK with a 999-year lease or whatever the lease may be. But all your costing is done, so there's no hidden charges. And then from our point of view, the important bit is your rental income with your fixed costs of your service charge and your management fee, giving your gross and net yield. Then your mortgage principal to come out of. And the way we work out your ROI is your net position on a monthly basis against your capital appreciation over a 5 and 10 year period. Now, as a rule of thumb on the projects that we're selling to Kenyan and African investors at the moment, if everything's, depending on what project it is, you're getting between 10 and 12% annual growth. And the rule of thumb in the UK investment property market is that you should be doubling your money over a 10-year period. But again, from an investor's point of view, we're just pointing out the detail that we go into. As I said at the beginning, Amoka and API are not a real estate company. We're an investment business. The due diligence that we go through, so we work with licensed businesses, is extreme. The market research that the team does, the projects that we offer clients, but equally that end-to-end service and finalising with the numbers that a client can be happy with.
Perfect, thank you. And then also to note, it's an added feature, but if you want, we always send our cash flows as well with your local currency as well as GBP, because especially in Kenya, we've had growing demand to have that line in there. So Tony, can you just talk through just a high level some of the projects across some of the key hotspots we discussed earlier in our presentation?
Yeah, look, I'm just a little bit worried about time, and I don't want to give too much away. We get into the sexy stuff now that clients hopefully understand a little bit more about the relationship between Amoka and API. But again, I've touched on Claremont Quarter. Pretty much, it's great. And again, any clients that get in touch with Sawan and Gurtej from Amoka, these guys actually have been to the Becca, going to Claremont Quarter very soon. Been up to see Waterhouse Gardens and been to Birmingham to see Boulevard. So these guys are your eyes and ears on the ground. So they can take pictures, they can do videos. Bosworth House in Leicester, as I talked about, been very popular because starting from 142,000, two beds around the 210 mark. So again, even with a two bed, shorter build time, but that short term let, as you can see there, yields up to 16.4%. And that's on a 21 or 24-day occupancy. That's not us inflating the figures. And again, from clients listening in today, it's very important to understand that as an investment business, that both Amoka and API are, is our figures are very conservative. And you saw from Sawan's graphs and the stats that we're producing for clients, it's all independent data. So we're not sitting here inflating yields or capital appreciation or the cash flows, hiding any figures. We're a very transparent business that puts the client first before we start drilling down, really. And again, the guys, they've got some fantastic videos. If you follow Amoka on socials, you'll see one of the best social contents that I've ever seen this week. The guys were on the site at Waterhouse Gardens. We launched this project 2 years ago with Salboy. That's the general build time when you're working with Salboy. I know we've got a couple of test cases coming up to show you. But when we launched it, it sold very quickly. We had 5 blocks there. The guys were on site and showed the CGIs that were in the first brochure 2 years ago to what Salboy have now delivered in block C and D that we're handing over with clients at the moment. Please follow Amoka on Instagram and have a look at that video, because there is absolutely no difference from the CGI. It is quite mind-blowing, really, how well Salboy have delivered that. And then moving on to Obsidian, it's one of my favorite sort of projects because Waterhouse Gardens is a regeneration area. We still have units left in Block A, B, and Block E, later completions this year. But Obsidian, for me, completes end of next year. It's more of a New York loft style. You can see from the image there. It's what we call city centre. It's in a ring road, so it's walkable to work. And again, going to be delivered with rooftop gardens, balconies, concierges, cinema rooms, gymnasiums, all that 5-star amenity that Waterhouse Gardens get and Salboy offer to investors in Manchester. Coming soon. It's like last night I went to the cinema and it's coming soon. Well, we wanted just to put in today that obviously we have access to 21 different projects in the UK, but Liverpool is back on the radar for the simple reason that we're going to be working with Lyndon Forshaw from the Forshaw Group. I'm not going to tell you the name of the project, but it's just outside Liverpool in a very affluent area. It's exclusive to API Global and Amoka in Africa. So we will be coming out with teasers over the next few weeks. We expect this to launch in Q3. Very well priced from about £145,000 entry level for the most affluent area on the Wirral in Liverpool. Now I've given a little bit more away. So very attractive payment plan. And after the success we had with Vivia in Manchester, that's more or less sold out now. We're very excited to bring this project to you guys very soon.
Brilliant. And Tony, just on the key advantage of investing off plan, we'll speed run through this, but just in terms of we've already.
I think it's very important that we just finish off with clients who may be looking at investing for the first time. and don't really understand the off-plan process. It's very simple when you work with a developer like Salboy. We can actually show 4 or 5 projects that they built. They bought the land. We talked about the configuration of the build with the developer. They built it, we sold it, and now we manage it for our clients. So, as I said on the previous slide when we're talking about Manchester, generally Salboy are 2 years off plan. So you exchange contracts and then you sit back and watch the capital appreciation by getting in early, basically buying at a discount, and then nothing till completion. And there is no risk because it's 100% deposit protection, fantastic quality, the best locations. We've done in Manchester, been with Salboy, and basically you can see, and as Salboy said, as Sawan says, we were a little bit tight on time, but you're 16% on a 1-bed, 26% increase in your deposit while you sat back and Salboy have built it. So from your initial deposit going in, there's not many investments that you're going to do through your banks or your wealth managers that can give you that type of return. Victoria House, we finished last year, and again, 17% on a 1-bed and 15% on a 2-bed. That's from launch price. As you can see on the 1-beds, we launched at 180, average completion price of 210, gives you a 17% increase on 50%, 55 Queen Street, that was.
And then, Tony, I know this is just from a capital appreciation perspective, but you had an incredible stat about the level of vacancy under all the properties under management with.
I thought he was going to ask me what did the Manchester rental market go last year. And I thought the last thing I want to be telling people is 24%. They're going to expect that every year. But no, yes, it's our management company. And again, we do a good job as a management company, but really it's down to the UK rental market being so strong. And again, we're not just going to sit here. When we do our one-to-one client meetings and paint the UK as a big rosy picture. We all know most economies globally are having tough times at the moment. We're under a Labour government. But I've been through COVID, I've been through Brexit, I've been through 4 or 5 different governments. And that supply and demand imbalance slide that you talked about earlier on, Sawan, is the driving force behind the UK property market. Now, from a rental perspective, we call it generations now of renters. So the average age of a first-time buyer over the last 5 years has grown to 38. So students coming out of university, even doing the masters and further education, it's 38 generally before they get on the property ladder, giving us plenty of tenants for our properties. So basically, we have over 1,000 properties under management, and we're just shy of 100%. It was 100% a couple of months ago, but we're handing over Block C and D in Waterhouse Gardens, Silk Yard in Derby. We're heading towards the Triangle. So there's 4 or 5 projects that are coming online. And as I said, certainly big developments like Waterhouse Gardens, landlords might get 1 or 2 weeks where they're waiting to move the tenant in. But generally, across all our projects, we're on 100% occupancy.
Brilliant. That's a really impressive stat.
That's my favorite stat.
For the benefit of our Kenyan clients, because we've been having these discussions quite a lot when we've been in Kenya last week, and Tony's there on the ground currently. What we're looking at here is basically how to leverage against FX risk when investing into UK property. So first and foremost, when you look at the graph, this looks at basically up to the pandemic, the level of volatility. You've had the rate reach as high as 207 to the pound, and currently it sits at 177. I mean, just in the last week, because of some of the strengths in the pound, some of the unfortunate events in Kenya, you've seen instability this past week. But what that means in terms of you as an investor looking outside of Kenya is that just on an FX basis, you would be 35% up from having bought pounds at 140 back in Jan 2020 compared to today. And that's not even looking at capital appreciation or rental returns. That's just on an FX position. And I think that point is really important to understand for our Kenyan investors on the call.
Yeah, great slide.
And then finally, moving on to Gurtej for how to best keep in touch with Amoka and API.
Yes, I wanted to say thank you to everyone who joined. And before we go, I just wanted to share a few simple ways to stay connected after the today's session. If you like more tailored advice and want to book one-to-one consultation with us, that's great, and we get that from most of our clients. And it's a great way to go through your goals and see what's possible with your budget and just your personal level. And if you want to join our WhatsApp community, we share latest updates, new opportunities, and insights in real time. And of course, follow us on Instagram. And if you keep an eye out for live projects, behind the scene updates, and market tips. And all the QR codes are on the screen right now, so feel free to scan any of interest, and we'll take it from there. Thank you so much for joining, everyone.
Thank you, guys.
Just some key takeaways here on the final slide, which will be available. We'll send this to you, which summarizes everything we discussed. And we really thank you for your time. And we'll finish here with a quote from the modern portfolio theory founder, Harry Markowitz, who said, "The only free lunch in investing is diversification." So we really appreciate your time, everyone. And we look forward to seeing you soon and having the one-to-one calls and seeing you on our Instagram and in our WhatsApp community. Thank you
Thank
all.
you, everybody. Thank you. Thank you, guys.
Bye.